following is a presentation of TFNN. The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. The Trader's Edge. Now, Steve Rhodes.
Good afternoon from TFNN. Welcome to the July 27th. Terrific Thursday edition of today's Trader's Edge Show. I'm your host, Stevie Perseverance Rhodes, who absolutely knows that each of us should always be pioneers of our future versus prisoners of our past. Hope everyone out there is having a great day. Let's make sure we have an extraordinary one. And of course, the easiest way to do that, it's to always remember that life happens for us, not to us. That's right. When you make that one little 2x4 shift, it means we can find the gift in every set of circumstance that life is going to toss at us. Today, you and I, we're going to go check out the circumstance of these markets. We're going to go figure out what the bulls and the bears, what the buyers and the sellers are communicated to you and I just past 1 o'clock in the afternoon. I want you to know that I'm absolutely grateful for your presence here, and more importantly, I'm here to serve you. So feel free to pick up that phone, dial on in 877-927-6648. Of course, internationally, 727-445-1044. If you can't reach us by phone, you can send me an email at steve@tfnn.com. Just in that heading, please put radio show question, something along those lines. Of course, inside the Tiger's Den, well, any ping will do. So let's go ahead and get this show started on Terrific Thursday. Of course, this is Tiger Financial News Network. I'm Steve Rhodes. Welcome to the show. Right now, the Dow trading up 39 points, while the S&P is off 4. NDX 100 off 26 points. Russell's off 5. Semis are down 17. New York Stock Exchange off 6. You've got gold trading up $9. Silver's up 11 pennies. Light sweet crude up 38 cents. Leading the charts here to the upside, it is Tree. Lending Tree is up $28. That's 15%. She's trading at $212.15. Charter Communications up 4.5%, up $15. Amazon up 4, trading out at 10.56. Facebook up 5. Boeing is up 5. Anheuser-Busch, this bud is for you, up 6%, nearly $6.71. To the downside, it is Buffalo Wild Wings, serving them hot today, off $12 or 10% to the downside. Public Storage down 9, 4.5%. F5 Networks off 7.5%. That's $9. Wex Inc. down 4. Whirlpool giving it a spin to the downside, off $14 or 7%. Of course, I want to look at what you want to look at. That means let's go to our first requester, and that would be Mike in Nashua. Mike is in the Nugget, and the question that he posed, are the miners broken? Well, let's go take a look at Nugget. Let's take a look at the GDX. That's down 13 pennies as we speak right now. Let's go ahead and put this chart up here. This was the chart of love. That is, which airline is that? That is Southwest Airlines. But let's change that to the GDX. Oh, you know what we want to do? We want to probably change the night. Well, I'll do it for both, because I know that Tom, who's our second messagee, who didn't actually ask about the mining equities out here, probably wants to know. Inquiring mind wants to know. I want to see if this is still lined up properly. So you got the GDX at 2272. Yeah, okay, good. So here's what I would say, Mike, and both of us taking a look, you and I take a look at this chart out here. This is a daily chart for the GDX. It cannot be broken. Well, it can be broken, but it will not be broken unless you were to see it close below Stevie's red line. That's really going to be your line of demarcation. As we speak at 1:10 in the afternoon, that price point is 22.15. If there were a close below, I wouldn't care if there was a peak below it, but if there were a close below Stevie's red line, that would spell trouble for the GDX. We'll go give you the number for the Nugget out here, but base it off of the GDX. That's more reliable than the triple ETF out there. The reason why then there would be problems is because we would then have a falling price oscillator. That's the bottom panel on my screen, a falling price oscillator below zero. Different than a falling price oscillator above zero. That would then say price would go down, and check out that bearish engulfing candle from, looks like maybe around July 11th or so, somewhere in that time frame. It's this candle session right here. That would become your level of support. That would be the craps, 7 or 11. Of course, on the first roll, it ain't crap. It's a winner out there. GDX is still a winner as long as it trades above 22.15. Now, in the case of Nugget out here, let's see if we can get any words of wisdom off of this chart. Is it trading at 32.14? Come on, move for me. Move for me. I believe it is. The number here that you're looking for, 29.97. Just because I've had some trouble here, internet issues and things to that sort, I just want to make sure that we're getting the accurate pricing. 32.15, where, yeah, it basically is close enough. Yeah, we're there. Okay. So, Mike, the number to be watching inside of Nugget would be 29.97. As long as it trades above that level, then you've got the potential for additional price moves to the upside out here. Now, in the case of Nugget, it actually has found resistance really where it should. You've got this nice little old bearish engulfing out here from June 28th. That is where the high came in yesterday. So we know that that is a little bit of a wall of resistance. You don't want this thing to close below 29.98 because that too would turn down its price oscillator below zero. That would give you a visit. Now, you may want to hold it. I don't know where your entry is. You may want to hold it then, but it would suggest that price would go test that July. It's the 10th or 11th out here. I wish my this system here were dead on balls accurate, but you'll know the swing point because it's a bullish engulfing and you will see it. So that takes care of that. Now, from a short-term standpoint, actually, not from a short term, from any standpoint. No, from the daily standpoint. Let's come all the way up here. Let's put in and see what's going on in your friend and mine. And that is, of course, the Japanese yen. What is she doing out here today? You know, Mike, now this is better for gold itself versus the mining equities, but we might as well go ahead and cover that. And as long as the Japanese yen is trading above 89.49, you're at 90 right now, even Steven, that is short-term bullish. We're very close to that price oscillator. Bottom panel of my screen, getting towards that zero level. And we continue to see Stevie's red line tested, and yesterday it was rejected. Actually wasn't tested yet today, but we're going to see another test of that red line here over the course of the next couple of days. But that price oscillator gets above zero, we see a nice little trampoline. The yen is going to head back to its highs, or at least a swing point from the middle of June, if not in fact the middle of April out here, and that would be bullish for metals. Should be bullish for the mining equities, but the GDX, the NUGT, remember, that is a basket of currencies, or a basket of stocks, I should say. And that then entitles it to be a basket case. Of course, we know that the biggest element inside, the biggest individual equity inside, is Barrick Gold. It's up 47 pennies as we speak right now. So that may be just simply saving the entire ETF structure out here. Now, intraday, what we saw was Barrick Gold get up and test the level of resistance. That was 1712. That was the top of its daily box out here. But thank goodness the slide to the downside inside of Barrick Gold has stopped. Let's go ahead, put this on a weekly chart here real quick, see what the weekly communicates to you and I. And the answer is 42 million. We've already done 71 million. Not really providing you and I with a whole bunch of information. Steve Rhodes with TFNN. We get back, we're going to go take a look at UGAZ as well as TVIX.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartleys, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com. David White has just announced a new online course that he'll be premiering to his subscribers the evening of July 26th, The Next Wild Wild West of Computing. Machine learning will be the biggest growth area for tech companies in the next 10 years. Make sure you're ready to capitalize on that opportunity. With over 50 types of algorithms and growing, Dave White will tell you why there are so many areas for companies to apply this to their business to both sell and consume. Right now, you can get a 30-day free trial to either of Dave's newsletters, Path of Least Resistance and The Technology Insider, as well as get a 30-day money-back guarantee when ordering Timing the Trade Charts. Don't miss out on the next Wild Wild West of computing as it premieres July 26th for all subscribers to Dave White Services. For all the details and to sign up today, visit the front page of TFNN.com.
Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Folks, the Dow, the only thing that is green out here, it's up about 20 points. So we'll go take a look at the markets here after we take a look at UGAZ and TVIX for Tom. So, in fact, let's do UGAZ first because then we can tie the TVIX into the market. So we looked at this yesterday, and Tom is trading this intraday, and he is back in the vehicle UGAZ. So if we take a look at the September contract, I believe that that is what we established is behind this, and the question is, where do we see natural gas headed to, the September contract out here? So the good news today, Tom, is that price is back above profiles, both daily and weekly, bottom of the box level. So your next area, where can this bounce to? Could make a move to the a bit higher, about $3. And then if it can clear $3, you're looking at about 308 out there. Clearing 308 says you're looking at 319, the top of the weekly box. At this stage here, what I would be really focused on is probably 308. You've got some, bearish type signals out here. We've seen resistance at the 311-ish type area. So that's what I would be watching. In the case of that's back on the trading days of, let's see, July 20th and June 29th. So UGAZ, July 20th, would take us into the price area somewhere between 1340 and 1460 out there. Now, with inside this vehicle, I suppose if you were coming into it with lots of volume, what I mean by there is more than 12.5 million shares until July 20th. Maybe that's a signal it's trying to bust out even higher. June 29th only had about 6 million shares, but really it's more so what's going on inside of that September natural gas contract. So I hope that assists you there. The other question was, can the VIX bounce from here? So let's try to go answer that question, and it already is, and let's go take a look at levels that one would be looking at. So yesterday, one of the things that you and I took a look at when we were noticing inside the S&P 500 that it was in its seventh wave to the upside. So let's look at this chart here, which is a combo chart. You get a combo for lunch out here, and this combo shows us the volatility index, the top panel of the screen. Bottom panel of the screen is the S&P 500. And so what you'll notice here is off of the lows that were formed back here in May, if we do our nice little seventh wave or wave counting out here, that yesterday, the day before, we were in wave number 7. Now, the problem here is that right now we are trading below Stevie's red line. We're 2470.67. It's just slightly below that. That would close below. That would say you're going to get some further pullback. That combined with the fact that you are in wave number 7, that would make a lot of sense. Now, in the case of the spot volatility index, we're actually only in wave number 4, really, if we just simply do the same counting from that candle on May the 18th out here. 1054, you're 1017 right now. So 1054 is going to be an important level for you to watch inside of the VIX. He's trading TVIX, but I would say 1054 would be a level that you would be watching. If price is able to close above that, a normal call would suggest that the VIX could get all the way up to 1176, so 1054. Now, what we have to do, both you and I, is say, well, if it were to close at 1054 or higher, what's that going to do for the one-day rate of change out here? And you've got to do the math. We're at 1021 at 6% thus far. We're talking about 1054, so it's another 30 cents. 30 cents might just put us up there. So here's what we would then also have to say, because you're trading this on the short term, Tom, and that is that if you were to see a one-day rate of change greater than 10%, right now, again, you're at about 6%, I'd go ahead and take my money off of the table. The odds just favor when we see days like that the very next day you're going to see bounce/bottom. Doesn't mean that it can't, the VIX can't continue higher or anything. You just want to go ahead and try to stack the odds in your favor. If it closes below 10% out here, well, then you have a decision to make, a 10% one-day rate of change. I'd say if it doesn't reject, meaning get up to the 50-day exponential moving average, 1054, that's the very right-hand corner of my chart out here, upper right-hand corner, then I don't know, you take some profits, you just sit on it, because you wouldn't really have a clear message out here. A rejection and coming back down would be a message that, okay, we're just going to go ahead and move and bounce around the bottom. So the number for the S&P 500, where did I put that? I'll just put the S&P 500 chart on my screen here, so that way we don't get the we get the full view like that. Oh, by the way, price was certainly moving higher with less relative energy out there. So it's going to be 2472 would be the number inside of the S&P. If the S&P at the end of the day, 4 p.m., is trading above 2472, then, Tom, I would say the message is all that price did today is come down, test a level of support, which held. So you would probably want to go ahead and unload that position there as well. So hopefully that assists you in your read on UBXY. So leading us into the markets out here as well, if we go take a look at what's going on inside of the indices, we will see pretty much across the board. Let's start off by taking a look at the NDX 100. So right now what we know is there are levels of support that are being tested. And by level of support, we are talking about Stevie's red line. We're trading just slightly below it, 5,900 even Steven. We're at 5,893. So watch the 5,900 level. A close below that, you can see a nice big old bearish engulfing candle. Engulfing the last 1, 2, 3, 4, 5, 6 sessions out here, but we are right into a little bit of a rising gap, I see, which could hold as support. But if you close below Stevie's red line, that says price can move lower. Move lower to where? 5,700 area, which would be that little red dashed line on my chart out here, would be the price level that I would be watching for. That then would give you the next opportunity to get long the NDX 100 out there. If we take it, what I did during the break, what I like to do when we start to see selling, as we have seen out here, is to see if we have linear type selling that indicates that it's nothing more than somebody just quietly or trying to quietly liquidate a fund. Now, here is the case of Amazon. And by linear, I mean like a straight type line. Typically, it is small-bodied candles. We really don't have that when we take a look at the chart for Amazon out with earnings after the bell. Is this an indication as to what's going to happen? No, not necessarily. And I looked at this for Facebook as another example. that has been trading lower nearly since the open. Now, this does look like nothing more than a trading desk out here. Nice little gradual move to the downside. And it looks like that selling basically was over at about 12:30 or so, 12:30, 12:40 this afternoon. But it's not across the board. NVIDIA, I went ahead and used that as a quick peek to see if we could see that linear type selling. Again, I'm just using a 5-minute chart. And here I would say, not really so much. If we look at Apple as another one, APL is another, and I don't see that in the case of Apple as well. Now, the benefit, if you just see that linear selling, is it helps me from a signature standpoint to determine whether or not this is something more than just some fun doing some liquidation out here. This may be a little bit more than that. Setting up the next buying opportunity in these markets. Steve Rhodes with TFNN.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Well, Tom, you've got decisions to make now. You've got the volatility index up 13% as we speak. So, in that last couple of minutes there that you and I were talking about it's straight out at 1086. Certainly, in effect, today is going to be whether this is just a one-hit wonder to the downside. You get that volatility index to do more than 10% in one day. That typically is the case. So, you've got the parameters that you need to be watching for that trade out there. We try to figure out where the market might be headed to, and we look for levels of support. The other thing I would be watching today's close is, look, if the ES Mini, for example, closes back above 24.69.75, at 7 points above where we're trading right now, by the way, then that'll be back to a very bullish message out here. In the NQ, the number is going to be 59.1850. That would be a level that you'd be watching. The Dow actually still has a bullish message out here, and it will so as long as it continues to trade above 21.522. And inside the Russell 2000 number, you're looking at is 1437.20 if we're going to go ahead and be exact out there. With regard to, I mentioned, let's go take a look, see if we can figure out where there may be support inside these equity futures contracts should they continue lower out here. Let's start off by taking a look at the ES Mini. This is a view that gives us both the 30, the 60, the 240, all of these, the 30, 60, 240 daily and weekly market profiles out here. So on the 30, the 60, and the 240, we're down below any levels of support. Inside of the daily, that's where it takes us to when we've hit that point of control, 24.61. That can be a level of support. The actual bottom of the daily, this is where you would see strong support, 24.53 and 90 pennies. And that should be support for the ES Mini. If we go take a look at the NQ out here, and on the NQ, we're below support for the 30, the 60, and the 240. And quite frankly, we don't see support for a long way down inside of the NQ. When I say long way, the actual next level of support, it certainly is not coming from the daily. It would come from the weekly top of the box, 57.96 out there. Just curious what the market breadth is for the indices out here. Let's go take a look at this. Let's take a look at, we up at the top? We are. So inside the NASDAQ and the NQ, or the NASDAQ 100, I should say, the 60-minute profile has switched to bearish, but the 240 has not. We're just taking a look at the dials out here. That's the right-hand side of my screen. Here, if we just take a look at when did this flip to the bearish side, this was right here at noon. No, at 11 o'clock. Was it 11 o'clock? No, it was not 11 o'clock. It was 12 o'clock noon on the hour where things switched to the bearish side, meaning a crossover. More equities trading below the bottom of their box versus trading above the top of their box on a 60-minute time frame. We don't have that reading on a 4-hour time frame. Inside the S&P 500, let's go find it. It has switched to what we will call market breadth bearish, both on the 240-minute time frame as well as the 60. Now, on the 240-minute time frame, let's pull the ES Mini over here. Come on. There we go. Let's change this 60-minute chart here to 240. That'll be easy to do, and this way we can go take a quick peek and see where its market profiles are. That was going to be helpful to each of us out there. So let's hit the OK button, wait for this to populate. And so it is right down at one of Stevie's red lines. This is, in essence, where it should be finding support. The exact number out here, I can't give you exact, I can give you really close, 2463.50 or 2461.75. So watch at 2463.50. Closing below that would not be good for the ES Mini. That would then go ahead and give you the information that that daily bottom of the box is where price would be headed to inside of the ES. Inside of the NQ, let me do that here. Well, the NQ is not back to market breadth bearish yet, but let's go change the instrument out here. Give me a moment to let's see how many moments it takes to do this thing. Is acting a bit slow right now, but that's okay. You guys have the time, and I am going to go ahead and pull that chart up for you. But man, this could take a little while doing it like this. And we're a couple minutes till we get into a break. So we'll just keep clicking. I'll get to the ends here pretty soon. Or natural gas. There we go. So here's the NQ September. What we're looking for here is to take a look at any levels of support that might show up inside of this chart out here for the 240-minute time frame inside of the NQ. So there we go. Populate. Its next level of support is not until you get into the 58.34 range on that specific time frame. Okay, so let's go take a look at some other markets out here. We've really covered gold and we've covered the yen out here. Let's go take a look at, let me get this off the chart. Let's go take a look at light sweet crude, see what it is doing out here. Right now you got light sweet crude trading at, we're looking at the September contract, trading at 49.05. That's up 30 cents or 0.6% out here. Let's go take a look at its profile levels, see if we can find those out here. So in the case of light sweet crude, it has completed a 1-to-1 A to B equals CD to the upside. You might say, what does that look like? So let's actually go do this on the larger chart out here. And for the A point, we're going to use the swing low. That was out here from the trading day of June 21st. Makes a run up here to a high on July 5th. A little bit of a retracement for a few days down to July 10th. And what you're going to see is an exact 1-to-1. I won't say exact. I will say close to exact. 49.08 would have been the actual exact A to B equals CD. But price here earlier in the day got up to a high of 49.19. Now, what we don't see out here is a bearish reversal candle. So without that in place, this would say to you and I that what light sweet crude is going to do or attempt to do is get up into a 1-to-1.272 A to B equals CD to the upside. That measurement is 50.51. If we turn off the A to B equals CD pattern, what you will see is the top of the weekly box at 50.36. So that is the next price target for light sweet crude out here. And if we go back and take a look at those market profiles, what we're going to see is 60-minute is above the box. We take a look at 240 above the box. Take a look at daily. We've already discussed that. Now, 49.38 is actually a level of resistance. So in order for the for light sweet crude to make that 50-56-ish move out here, it needs to clear 49.38. Now, that 49.38 level out here, now this is because I have my, I'm going to do this for you. This is because I have my synthetic contract out here. There is no bottom of the box. Is there? 44.29. Oh, there is. It's right here. 44.29. So what you can see when you take a look at this current profile out here, you can see that this is a bearish structure on a weekly basis. So this level where light sweet crude is trading at, it's a tough sledging through. It's a tough resistance area, 49.38. But if, in fact, price closes over that, that would be very bullish because on a weekly basis, you have a bearish structured box, and it will have given way to price. Right now, we've got the Dow trading off about 8 points, S&P down 15, NDX 100 off 83. We'll be right back.
Trading is different than investing, but the opportunity to take advantage of short-term trends is only one if you get the direction right. Direction leveraged and inverse ETFs offer bold trades on U.S. and international stocks and bonds. Direction leveraged ETFs. An investor should carefully consider a fund's investment objective, risks, charges, and expenses before investing. A fund's prospectus and summary prospectus contain this and other information about Direction shares. To obtain a fund's prospectus and summary prospectus, call 866-476-7523 or visit directioninvestments.com. A fund's prospectus and summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC. TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now, you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Welcome back, folks. Dow's up 3. S&P is off 15 points out here. So let's go take a look at Amazon on a daily basis. And let's do that by taking a look at both our e-signal and our Ninja Trader charts out here. So we can see that this has made a higher high today with volume thus far, 6.6 million shares out here. That says that price will eventually be back up there. But we have seen some sell-off. This it will at this stage here, support, if we just simply use market profiles inside of Amazon, is going to be the top and bottom of the daily box. Top would be 11.53. Top because we're trading above that level as we speak right now. Now, the mere fact that, and this is how Amazon was trading, this box formed on July 24th. That was the beginning of this week out here. And when the box formed, price was above the box. That's a very bullish signal out here. You don't usually see that. When you do see a new box form and prices above it, it's a bullish signal. Voila. Just simply come back. Let me just turn off the weekly chart out here. The weekly profiles, I should say. So let's do that, because this will prove the point, so to speak. The last time that we saw a box form with price above it in Amazon was May the 4th. We can see this box right here. I'll just go ahead and put a yellow submarine around it, a little rectangle. And so we can see when this formed, price was above that. That actually led to higher price out there. It's not common, although we've found it now in 2 instances, the only 2 instances I see in this chart right now with regard to Amazon. Let's put this on a weekly time frame. Let's see if it's completing any kind of a pattern out here. And it's got an A to B equals CD, large one that's underway. Takes price to 139.31 out here. But it's a weekly chart. The weekly time frame is not over, so we've got to pay attention to this tomorrow. I won't be with you tomorrow, so we'll have to go take a look at this on Monday. Let's go take a look at it on my other charts out here. Oh, this would be kind of interesting to take a look at this. Let me see. Can I find that? No, I can't. Let's go take a look at this chart right here. So this was our yen chart. Let's pull this over here. Let's take a look at Amazon. So I heard earlier that Jeff Bezos was the richest man in the world. I wonder if that lasts just a couple of hours, if there's some big selling to the downside out here. I really don't think he cares from a standpoint of it's stock that he's not selling as we speak. So come on, populate here for us. I apologize for the slowness out here. No idea why this is taking so long to populate. But that's like a big bummer. All right, let me see if I can get off the screen. I'll let it populate off to the side, hopefully. And then when that populates, we'll come back and look at it. In the meantime, we'll just simply have to stay off of, well, let me try one thing off screen. Hit this button. Does that do anything? The answer is no. That didn't do diddly. Bummer. Okay, well, as we take a look at, we've got enough signals out here, enough information for us to take a look at this chart, that being the weekly. And again, no signals yet of any kind of a reversal of fortune inside of Amazon out there. Let's take a look at it. I don't have any requests. Well, let me close this chart. I don't see anything in the den either. So what do we want to look at next? What do we want to look at next out here? Let's look at some of these stocks that are moving, something else other than Amazon. Let's go take a look at things moving to the downside, like Buffalo Wild Wings, $14 or 11.5% out here. Get a feel for what this is doing. So as we speak, AEM, I'll take a look at that for you, Danny. So right now we've got Buffalo Wild Wings on a weekly basis trading below a swing point from the week of April 25th, which had 8 million shares. You're only 4 million shares as we speak right now for the week. This is a weekly chart. And Buffalo Wild Wings, though, nonetheless, it's down below all weekly swing points. So this is headed for the 95 to 70 level out here. The A to B equals CD down pattern, volume or not, inside this thing on a weekly basis. That's going to give us a price projection of 91.52. So 91.52 is where it's targeting. Below that would be 68.79. You want to take a look at AEM, Danny? So let's go take a look at that for you. Let's just start off taking a look at the weekly chart. And on the weekly chart out here, oh, good, it populated back there. On the weekly chart here for Agnico Eagle, by the way, the profiles that are showing up right now are weekly profiles, in this case here on the blue. And so from a weekly standpoint, what AEM has been doing has been moving higher into a swing point from February 6th, which only had 5.8 million shares. You're moving into it with 7 million shares. This says, even though it's rejected it, that it will be back up there. There is 49.25. Right now you're trading at 48.02. That is what the weekly chart is communicating to us. Let's flip this over and take a look at the daily chart. Daily chart shows us the resistance in this set of swing points out here from May 17th, which had 2.9 million. You've traded into it with 1.6, so that's a little bit light on the daily volume. 2 million as well on June 6th. Today you're 1.6, so that's similar or maybe a bit more volume. So Agnico Eagle, now the blue lines on my screen out here, in fact, are the daily profile. So Agnico Eagle, you know what it's doing. It's trying to make its way up to the swing point probably from February 9th in the 49.79 to 51.21 type level out there. So, Danny, hope that assists you. Let's take a look at some other things here, moving to the downside. Let's see, big-wise, percentage-wise, what do we have? We've got Spirit Airlines. Let's go take a look at Spirit Airlines, SAVE. So the airlines have just totally gotten the kibosh out here. Big volume, 7.8 million shares today. That's big volume for Spirit. And if we try to figure out where this thing is headed to, looks like the bottom of a area that was, this is a daily chart, takes you back to November 2015. Yeah, November 2015 is what we're talking about. Let's put this on a weekly time frame, see if we can get a little bit better view as to what it is doing. So the weekly swing has volume of 12.1 million shares, and you are already at 12.1 million shares as we speak. It's not there yet, but it is coming to a screen near us. That says that Spirit Airlines headed to a price range of $32.73 to $37.41. We won't know if that level will hold as support until we see a rejection of price and see that on a with lighter volume. Of course, you've got a wide-ranging bar on a weekly basis, and you and I know wide-ranging bars are not the end of a move in a market to either the downside in this case or the upside, and that is on Spirit Airlines. That was the weekly chart as well. What else do we have moving? We haven't looked at Whirlpool in a while. WHR is the ticker symbol. That's down $14 or 7.5%. Again, still a weekly time frame chart, but doesn't look like it has broken the trend. But let's go confirm that. Let's not use our eyes, because I wear glasses, and that means I need assistance out here. It has not broken its trend line out here, but that doesn't mean that price won't pull back to the trend line, and that would be in a price range of about 168 or so, and that would be on Whirlpool. That would there's also a rising price channel. That's going to give us a different set, slightly higher with regard to where you would take a look at support. That's probably in the 171 level. Ticker symbol there, WHR.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
TFNN has put together the finest programming lineup each trading day, featuring some of the most knowledgeable and respected financial minds in the nation to educate traders and investors. On Mondays, Wednesdays, and Fridays, we broadcast 8 hours a day, starting at 9 a.m. as Larry Pesavento kicks us off with Trade What You See. Tuesdays and Thursdays, we broadcast 11 hours. Get an early and healthy start to your day as Nico and Paige bring you Living a Primal Lifestyle. Then catch Andy Hecht at 5 p.m. with the Commodities Hour, following the Tom O'Brien Show. See the TFNN program lineup via the link on the front page of TFNN.com to get a complete overview of our TFNN shows and hosts. And keep TFNN's Tiger TV tuned in on your mobile device, PC, or Mac for the latest financial news and information throughout the broadcasting day. TFNN.com, educating investors. Join David White as he keeps you up to date on the latest tech stocks while he uses his Power Law Vector Indicator to identify the best trades. The Power Trading Hour, next on TFNN.
Welcome back, folks. So we've got two emails that have come in. One from Tom, says that he has unloaded on the TVIX trade out here. Now, he's really referring to, we were talking about the volatility index, and that he's got a decision to make if, in fact, at the close, that the volatility index is has a one-day rate of change greater than 10%. Right now, as we speak, 154 in the afternoon, it's 12.29%. And this chart here shares with you the reasons why. If we take a look at the blue arrows are the ones where there is a positive, that means plus 10% one-day rate of change, such as what we're looking at right now today. The last three, as an example, we'll just go back. The last time we had one was on July 6th, 13%. Very next trading day, S&P 500 closed higher. That also meant the volatility index closed lower. Time before that, June 29th, 14% one-day rate of change. Very next trading session, closed higher. Volatility index closed lower. The time before that, June 27th, 11.72 was the one-day rate of change. What happened the very next day? Shoot, the S&P 500 closed above even the open of the prior day. In this case here, TVIX would have given back its gains. Come back here and take a look at May 17th out here, where there was a 46% one-day rate of change. What happened the next day? The S&P 500 closed higher. So as you can see, same type of thing out here, January 30th, same type of thing. Now, on November 3rd, you, in essence, had a flat session. In fact, the S&P 500 closed a couple of points lower, and it was very next day. That's why I've always said within 48 hours, the way that this pattern plays out, you typically see a bounce or a bottom out here. We can find failures, but they are far and few between. But it requires 10% or greater. 9.99 doesn't cut it. It's got to be 10 or more. One other question that has come in here, I see, from James. James asking the question, he just got a quote for Apple. He's holding 100 shares. Should I sell? He bought it at 150. So let's go take a look at the Apple, see what it is doing. And the answer, James, would be bought it at 150. It's trading at 149.63. So what was the I need to understand, if you will, what the thought process behind that was, trade-wise, investment-wise, and so forth. Here's what I can share with you, and that is on the daily chart. We're looking at support of 147.59 that you would like to see held. That is the bottom of its daily market profile out there. So far, the low was 147.30. So that level was tested, and it was rejected out there. Let me go turn the weekly profiles out here. So you're in a slight loss, 30 cents or so. I don't think that's what you're worried about. At this stage here, price has held support. That's the only real information that I've got, other than, let's go take a look at this chart. I take that back. Let me see here. This will show me what the red line level is. We're really trading on it right now. It looks like that's probably about 149.70. So if price were to stay above that, that would be good. As far as my money flow index, that is still above the zero line. So that is short term, or that's bullish in essence with regard to Apple out here. But it's really going to be, James, all about the close out here. But at this stage, what I can share with you is levels of support have held. Volume inside of Apple as we speak right now, about 20 million shares out here. You know, what do we use for a swing point? Look, on June 12th, it was 72 million shares to the downside. So, you know, is it pulling back on light volume compared to that day? It most certainly is. Folks, stay tuned. Your favorite polar bear in mind, who gave a great workshop last night. David White is up next. Then you've got Tom O'Brien from 3 to 5, Andy Heck to take it on home. I will see you on Monday. Have a great weekend. Take care, folks.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active effective trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
You're watching Tiger TV.